Hey everyone, this is a quick update on some new divergence signals that I'm seeing. One tool that I like to use to gauge public interest and the money flow into Bitcoin is Google Trends. From the start, the price of Bitcoin has had a very high correlation with the level of public interest that it was able to garner. A good way to approximate public interest is to keep track of search term volumes like buy Bitcoin on Google Trends. When you compare the Google Trends search interest versus BTC USD, we can see that the price of Bitcoin tends to peak around the same time as the search interest. There's a major peak in 2013, followed by some notable peaks last year in May and August, and a huge surge in November, December of 2017. And we can see when we go on the BTC USD chart, we can find the corresponding corrections and peaks in price at those exact same times: November 2013, May, August, and December of 2017. What's even more striking is that the magnitude of the search interest moves tends to match the pricing moves. So for the 2013 peak, Google assigned a search interest of magnitude 12 versus a magnitude of 100, or the all-time high that was reached in December of 2017. Google rating is completely relative, so this means that the search interest in 2013 was almost 10 times lower than the peak that we saw in 2017. This delta is actually pretty close to the relative price increase of Bitcoin from about 1,000 to currently 15,000 US dollars over that period. So recently, it's worrying to see that the public interest in buying Bitcoins has taken a sharp fall. Much more so than the BTC price correction, it's now at a level last seen in late November of 2017, where BTC USD was trading around 8 to 10,000 US dollars. For me, this indicates that the supply of new investors entering this space has really dropped a lot from its peak. And while this doesn't mean any immediate dangers, I think if the interest level stays low or heads even lower without any major news or development, I think we can see continued downward pressure, and we can see BTC USD retest those $8 to $10,000 levels. While some of the drop might be due to the holiday lull, this data does include the first few trading days of 2018, and search interest is actually still trending lower. So I think this is a metric that we definitely need to keep an eye on. But I think there's also something else going on here besides the cooling of retail investor fervor. I think some institutional money is making moves here. While BTC did well on the first few trading days, it's definitely outshone by some of the altcoins. Ethereum, Steam, Stellar, Ripple, and others have made far bigger advances. The currencies that made the most gains recently tended to have faster networks and a very active development community. I think some investors might be getting impatient with Bitcoin's network issues and lack of progress. From a performance standpoint, it's starting to look like the first generation proof of work based currencies are not sustainable, and investors are diversifying to currencies using proof of stake or some other alternative algorithm. I think if this story really takes hold, it can lead to a pretty seismic shift in the landscape. In the next episode, I'll try to do a deeper dive on the recent outperformance of proof of stake coins versus first generation coins. So this is the first video in a series that I'm starting on Steemit and YouTube called The Systematic Investor. I want to focus on high quality data-driven analysis. So please subscribe, and I'll be working hard and posting daily. If there's anything that you'd like me to cover, just let me know in the comments. Thanks, and I'll see you next time.